To put it simply, it is the essence of the gold and silver markets. Banks in London and New York manage the gold and silver markets, which, in my view, are nothing more than bucket shops. And sure, delivery will be requested by someone significant at some point. Regarding silver, as you recall from 2021, there was a silver squeeze that caused its price to rise to $30, much to the delight of many. They were afraid it would start a fire. I had my doubts because I've witnessed the manipulation of the futures market by bankers for more than 20 years. I think it looks incredibly optimistic that silver has finally broken above $30 after all this time. A couple of months ago, we were able to overcome resistance at approximately 35. That is the technical view. It appears that 40 will be the next objective. Yeah, they're making a lot of efforts to prevent it from reaching that level, but I still believe it will happen. From a fundamental standpoint, I find it quite bullish that there has been a silver deficit for the past 5 years, meaning that production and mining of silver are falling short of demand. Additionally, countries like India and China require substantial amounts of silver for various purposes, including investment and infrastructure development. Because of this, silver is, in my view, one of the world's most undervalued assets. You know, we're still not even close to where silver was in 1980 compared to 2011. Yeah, having patience is, in my opinion, the most important thing when it comes to silver. I believe that once silver breaks through $50, the line in the sand, we will see fireworks in the silver market. Meanwhile, silver miners are looking good. In light of this, I'm also interested in owning physical silver, but I believe that investing in silver miners is a great way to get exposure to this trend, and they're definitely making progress. For starters, I think it will be uncharted ground once it passes past that crucial technological stage. Imagine this. The silver long-term chart dates back to the early 70s, and it's a massive teacup and handle formation. Such formations are extremely rare, and especially multi-dead ones like silvers. I believe Jim Sinclair was the first to bring this up, but I first heard of them in the early 2000s when we had one in gold. It had formed from 1996 or 1997 to 2003 or 2004. And once we broke that top, the price was around $400 to $430. Indeed, gold soared in value and within a span of 3 to 4 years was trading at $1,000 per ounce. And that's why I believe the teacup formation is like a pressure cooker. It's been held at a low level for decades, and when it finally breaks through, I'll witness fireworks. Who are these people anyway? I'm going to guess they're the central bank's employees who deal in gold. Although central banks do not own a lot of silver, I believe they are involved because, historically speaking, silver was still used as money in several European countries until the early 1970s, the United States until 1964, Switzerland until 1966, and so on. I believe the UK transitioned away from silver a little sooner. The UK was essentially bankrupted by 2 big wars in 1947. Okay, so I get that. Silver is in our DNA, and many words mean money in different languages. For example, argent in French and plata in Spanish. The word dollar originates from the Spanish $1,000, which was based on the Yoim's taller silver coin. I believe that is the reason behind their concern. Additionally, they often want to keep the market volatile as it discourages investors. That was one of the techniques they essentially put in place when, for example, the United States legalized gold again on January 1st, 1975. They wanted to behave like a volatile commodity. In a document that has been leaked by WikiLeaks, the Treasury and the Department of State discussed the prospect of a futures market for gold with London-based bullion dealers. The message conveyed is that the introduction of such a market will serve to maintain market volatility and discourage the public from requesting physical gold. The case with silver is same. My prediction is that they will fail because the debt crisis has spiraled out of hand, rendering the dollar and other fiat currencies obsolete. As for them, I believe they are aware of it, even though Panbenani pretended not to know what gold was when Ron Paul asked him. He actually said it was an addition. This is why the bankers try to keep things under wraps and control. However, you never know. The bankers might even reverse their short positions and go long on silver. Who knows? In the end, they usually come out ahead regardless. Yeah, I spent about 20 years working in the futures market, mostly with government bonds and interest rates, but I dabbled with other types of futures as well. Let me tell you, when someone comes in with a large order, it can really move the price quite a bit, especially in silver, because that market isn't as deep as gold's. These individuals are well versed in the market's ins and outs, and when things become too choppy, they'll step in and sell 1,000 silver futures, which is a significant amount. It was more challenging to manipulate the futures market before, say, the early 2000s, when all the trading took place on the floor and everyone could witness. It would be possible to find out if JP Morgan or the broker they used was selling. However, by 2004 or 2005, all futures were traded electronically as the market shifted to an electronic format. They can hide behind that, as it doesn't show who's conducting the buying or selling on the screen. Spoofing the market is another thing they've done for which they've received fines. What this means is that you make a massive offer and then pull the plug. Unfortunately, the purpose of the exorbitant offer is to deter potential buyers, which may lead to some sales. The folks at the bullion banks claim, well, that they never run out of money. Everything is about hedging. Still, I'm not convinced by it, and I believe they also front-run their major clients quite often. In the event that a large hedge fund approaches a bullion bank and states, I am interested in selling 1,000 silver contracts, the bank will comply. As a futures broker, I was always careful not to manipulate orders in a way that would hurt my client's position in the market. I would gladly work a large order he handed me to sell something. Although I wouldn't recommend it, I have seen them attempt to undercut prices when we reached 30 in 2021. And even the president of the CFTC admitted, well, we had to temp down the demand, you know. They basically smashed the futures at the 30 level, and they kept silver from rising for like 3 or 4 years, really, definitively. So that's the deal, and it works with gold too. It occurs in several markets as well. Whereas regulators step in and crack down hard when this occurs in other markets. However, the regulator does very little when it comes to gold and silver. The Hunt brothers in January 1980 are a perfect example of this. They do it whenever market prices are rising sharply. They decided to outlaw the purchase of silver futures due to their loss of market control. So that's the CFTC. Their job isn't to protect investors, it's to safeguard bankers and regulators. It was Innecco in the year 2022. I believe the conflict in Ukraine was the initial spark, leading to a massive short squeeze and the cancellation of trades. However, I recently had a conversation with David Jansen, who informed me that the LBMA platinum market is currently experiencing a shortage of physical platinum in London, despite the fact that they continue to trade about 3 million ounces of platinum per day. In other words, it's similar to a bucket shop, as long as customers don't want delivery. I don't know if you know the term, like Jesse Livermore. He used to Livermore. Yeah. He used to wager on the prices, and that's basically, and he didn't actually receive the shares when he did that. And that's really what these gold and silver markets are. The gold and silver markets managed by London and New York, the banks. In my opinion, they're bucket stores. And yeah, one day, someone major will ask for delivery. And like you saw earlier this year in January, the spot settlement for the LBMA gold was 4 to 8 weeks. Basically simply didn't have the gold to provide. They said it was very heavy and they had problems moving it. But the other thing, Andy, is that they can always just close the market and proclaim force majeure, or say that they have the wherewithal to modify the regulations and say you can't have the silver or you can't have the gold. You get cash settlement. So that is possible, but then they'll lose a lot of credibility as an exchange. And I think that's happening on COMEX and LBMA as well. And I think the price discovery mechanism is moving more and more towards the east. And by that, I mean like Shanghai, Hong Kong, even Moscow, they have a physical exchange. And I think they've opened another one in St. Petersburg, Dubai.